All right. Well, thanks everyone for coming out. A couple of new faces and some, I think, existing shareholders here. So good to see everyone. Skyharbour, for those of you who aren't familiar with the company, is a high-grade uranium exploration and development company. All the projects are in the Athabasca Basin in northern Saskatchewan. For those of you who aren't familiar with the basin, it is the highest grade depository of uranium in the world. It's also ranked the #2 mining jurisdiction by the Fraser Institute. So one of the best places in the world to work and obviously to look for high-grade uranium. We'll get right into it here. So I like to highlight this acronym that we have at the company, and really as investors, shareholders of the company, these are kind of the three main talking point. Keep it nice and simple: people, timing, and projects, right? So the management team, the technical team, and the strategic shareholders and partners that we have. Timing with the uranium market, this is very topical right now. We've seen a 2-month tick up in the price, the spot price. We've seen the equities start to move now. Cameco is one of the best performing mining stocks this year in 2018. We're starting to see that trickle down into the mid-tiers and into the juniors, which will help Skyharbour. And then last but not least, the projects, the asset base. So just to start off with the team, myself and Jim Pettit, the chairman of the company, we started the company about 5 years ago. We had just sold a gold company to New Gold. We made a high-grade gold discovery in Ontario, delineated a resource, and shortly thereafter we sold to New Gold. This is the strategy. This is the plan for Skyharbour. Our team and our technical team are focused on the discovery process. That's what we do. We go out, we find these high-grade deposits, then ultimately we're looking to for a larger company to come in, and that's where you as the shareholder investor, that's your payday as well as ours. Rick Kazmersky, he's the head geologist, well-known exploration geologist in the Athabasca Basin, was the exploration manager at Cameco for 12 years. He then built and sold his own uranium company called JNR. So you can think of Skyharbour as JNR 2.0 if you'd like. I took it from a $5 million valuation. It was trading at over $400 million in 2006, 2007. Dave Cates. Dave is the president and CEO of Denison Mines, listed here in New York as well as on the TSX. Very important part of our story. Denison Mines is our largest strategic investor and shareholder with 10% of Skyharbour, and a very close working relationship with Dave and his team at Denison. And last but not least, Paul Matizik came on as a strategic advisor and large shareholder about 1.5 years ago. He's built and sold a handful of mining companies, most notably a uranium company called Energy Metals Corp, which he sold in 2007 for $1.8 billion. So we look here, capital structure, straightforward, 55 million shares issued and outstanding. It's a $22 million company currently. You'll see here 82 million in fully diluted. A good chunk of that are some warrants that we issued in a financing a couple of years back, and I can send you a breakdown of that if you like it. Notable and strategic shareholders, management and insiders, we collectively own about 20%, so we have a lot of skin in the game. Marin Katuza and the KCR Fund. Marin's been a cornerstone investor from day one. One of his 2 uranium picks, Denison Mines, I mentioned. And then you'll see further down, just in the last year, had some more institutional interest. OTP Bank in Hungary, large shareholder, as well as KS Investment out of Shenzhen. So predominantly retail, but we are starting to see now some smaller funds and family offices come into the story as we've come a long way in the last couple of years. Uranium market, I'm more than happy to talk more about this with anyone. I could spend hours on this, but I'll just quickly go to this last slide here on this. I think this is one of the most important charts in the deck. You look at that production cost curve, right? So the lowest cost producing uranium mine in the world in Kazakhstan is break even at about $22.50. This current spot price is $23.50, and that's up from $20 just a few months ago. That's where I see the price of uranium going. Just to get to the average global cost of production, we need to see an almost doubling to $41, $42 a pound. And to see any new meaningful production come online, new mines and projects developed, you need to see $50 to $60 uranium. So we're not talking about a 10, 20, 30% bump. We're talking a doubling or a tripling in the price. Just recently, we've had some notable supply curtailment production cuts. Kazakhstan, Kazatomprom there, just on Friday announced an additional 4 million pound cut. Cameco earlier this year shutting down MacArthur. I see that continuing. The unit cost at MacArthur is about $35 a pound. There's no way that mine's coming back online until we see the spot price trading above that price. We also have a number, and this doesn't get talked about a lot, a number of mines globally, the Ranger mine, as well as we saw Langer Heinrich shut down recently, but a number of mines globally that are coming to the end of their life of mine, right? And that's important. It's not just about turning the tap off at some of these bigger mines. It's also, we're mining out our resources and reserves right now, and you'll see that work its way positively into the market as well. So finally starting to see the supply side respond. We're starting to see the supply cuts work their way into the market, and the spot price has been ticking up and will, I think, continue to tick up over the next few years. So all of the projects, as I mentioned, in the Athabasca Basin. I like to highlight this chart here. This shows a few charts of notable discovery stories in the Athabasca Basin. When you're buying shares of Skyharbour, you're buying into a discovery story. We are at that front end of the discovery process. These are companies' notable successes in the last 6 or 7 years. NextGen Energy, a lot of you familiar with NextGen, has gone from a $40 million valuation to over $1 billion. That's on the back of a high-grade discovery, certainly not on the back of a booming uranium market. Fission, same scenario there. Alpha, which was bought out by Fission, and you had about 7-8 years ago, Hathor with a major discovery. Hathor, 60 million pounds that was bought out by Rio Tinto in 2012, 2013. It was actually a bidding war between Rio and Cameco. So this just shows you the wealth creation potential and that high-grade discoveries in the basin provide, and that's very much what we're looking to do here at Skyharbour. So just to go over the projects, 5 projects. I'll note that one of the mandates, one of the strategies for Skyharbour has been acquiring these uranium assets at discounted and attractive valuations. We've spent now less than $4 million Canadian, mostly in stock, to acquire these 5 projects. 500,000 acres of property scattered throughout the Athabasca Basin, exposure to both the east, the infrastructure-rich east side of the basin, as well as the west side, which is where you've seen some of the notable recent discoveries, including Fission and NextGen. We have a dual-pronged strategy at Skyharbour, and I think this is what differentiates us from the handful of other juniors left in the space. But we employ not just or look to create or make new high-grade discoveries and in the Athabasca Basin. That's the focus for us and call it the #1 strategy for the company at our flagship Moore Lake project. But we are unique in that we also employ the prospect generator strategy, and I'm sure a lot of you are familiar with that. We have a big property package. A lot of companies just do one or the other. You're either a prospect generator or you're a discovery-driven company. We're both, right? And so the focus for us is very much on making new discoveries at our flagship Moore project, but we also look to create value by farming out our secondary or non-core projects. So I'll get right into Moore because that is really the crown jewel. So this is a project that we acquired a couple years ago. We've since then drilled about 14,000 meters. We've had a lot of success. We've gone in there with a new look. This is a project that's had a lot of historical exploration, about 40 million in historical drilling and reconnaissance and geophysical work. We've gone back in there and we've been looking in some new areas that were basically just overlooked when they were doing a lot of the work back in the early 2000s, late 90s, early 2000s. One of the things that we look for that's changed and that we look for on this project is the exploration historically has just been focused at what's called the unconformity or in the sandstone. This project is very much in that grouping of projects where it had a lot of previous drilling, but not a lot of drilling testing the basement rock. And so we've gone back in there now, and that's going to be one of the focuses for us going forward is testing for and drilling for high-grade mineralization in the basement rock. We think there's the potential for 100+ million pounds of high-grade mineralization a bit deeper. We are hitting high-grade at the unconformity. One of our best drill holes last year, 21% U3O8 over 1.5 meters within 6 meters is 6%. So there is a small high-grade deposit there that we're looking to expand, and we're going at it with a new look at the exploration. The other projects, so that's where Moore is where you'll see most of the news flow and the catalyst for the company. The other projects, again, we're employing the prospect generator strategy and model. We've brought in 2 strategic partners on one of the projects over by Fission and NextGen. Areva, which is France's largest nuclear and uranium mining company, they've come in on an $8 million earn-in for 70%. They just finished a drill program there. We'll see more work on that project that they're funding over the next few years. Similar kind of a deal with Azincourt. I'll just wrap up here. So those are two perfect examples. Those collectively, that's a $12 million combined fund exploration and cash payments that in stock that are coming to Skyharbour over the next few years. We will look to do that with the other projects as well. So just to finish up, people, timing, and projects, you're getting all three when you invest in Skyharbour. Focused expertise in the Athabasca Basin, timing with the uranium market. I do think we have now seen the tide turn there. And then the asset base, this is an asset base that at one point, those two projects, Moore and Falcon Point, were valued at over $400 million in 2006. 2007 in the previous uranium bull market. So that shows the kind of re-rating potential that this company has going into a new market. Thank you.